All right, class. Welcome to the Principle of Finance BSAD 329 class for this summer. My name is Pritam Saha. I'll be professor or instructor for this course for these semesters. You guys can call me Professor Saha or Dr. Saha, the way you are comfortable. So today is the very first class. So you can think about today is the class for June 5, Monday. So for this class, what are you gonna do? So we're gonna go over the syllabus in very details, and then we're gonna start chapter 1 very briefly. So let's go over the syllabus. Let's know about the terms and policies of this class and how we should move on and what you guys should expect throughout the semesters and how you guys should prepare so that you guys can do well for this class. So I already said my name. So this is my name. And so for this class, Thursday is basically office hours, but it's by appointment. So if you guys shoot me an email regarding like, hey, professor, I need to talk to you regarding any problems, any homework, or I'm struggling any concepts, feel free to shoot me an email. We can do Zoom on Thursday, every Thursday, from 11 a.m. to 4 p.m. So don't hesitate. For any problem, feel free to shoot me an email. So if you shoot me an email, asking for an appointment, I'll reply back with the Zoom link so that we can meet Thursday anytime from 11 to 4 p.m. This is my email ID. So if you have any problem, feel free to shoot me an email. So when you email me, I always recommend on the subject line, be very specific and very clear, because sometimes I teach multiple classes. As a result, it's tough for me to figure it out who you are and what is your problem is. So on the subject line, I always recommend to mention, let's say on the subject line, you should say BSAD 329, and then you can do this, and then you can write your name. Let's say your name is, let's say Amanda. Write your full name. Let's say Amanda. And then what is your question is? You have problem with grading, you have problem with homework, you have problem with any specific concepts. So just say, I have problem with my homework. I always recommend to shoot me an email, and on the subject line, make sure you do that. Course number, BSAD 329, your full name, and what is your problem? What do you need help with? That's it. So office hours, Thursday, 11 to 4 p.m. Shoot me an email. I'll send you the link. Okay. This is a 3 credit hour course. Okay. So I expect spend some good amount of time and go through the materials, go through the videos that will help you to prepare for homeworks and exams. Course descriptions. So this is basically Principle of Finance class. Now, if I want to give you a brief summary, like what you're gonna do throughout the semesters in this class. So this is a principal class. So what are you gonna talk about? Different type of business. We're gonna talk about how these different type of business are managed, how they make decisions. Like if they want to take any project, if they want to issue for capital, what are the key decisions they should think about? And then you also think about from the investor's perspective, if they want to invest in stocks, bonds, what they should do. So in short, in Principle of Finance class, we will go over all those financial decisions made by different form of business or investors, individual investors. So that's the big picture of this class. Now, course format, I think you guys know, summer class, asynchronous online. So I think I already made an email to all of you that each week I'm gonna upload slides and recorded lectures. Your job is to go through the slides and record lectures and also read the books. And then there are frequent homeworks and exams. So your job is to take those homeworks and exam through the Blackboard. So this is your job. This is the course format. So we will move, or we'll do everything through the Blackboard. This is our best friend for this semester. What do you need? I believe you already have an idea of what you need. This is the book I'm going to follow. Okay. So I strongly encourage all of you buy this book. Because this is the principle of finance class, most of you have no background with finance. So I strongly encourage, other than the recorded lectures and slides, read the book. That's going to help you to understand the concepts, topics, and help you to do the homework and exams. So you need financial calculator. So I'm fine with if you use a very generic calculator or scientific calculator. But the thing is that if you don't have the financial calculator, life will be tough for you. So if you go to the Google and let's say Google financial calculator, the Texas Instrument BA2 Plus. So there are like different versions, okay? So it doesn't matter. So make sure you can do this version, you can do that version, doesn't matter. So I believe these are all used, maybe that's why price is less, but you do whatever you want to do. As long as your financial calculator is working, you know how to run this calculator, I'm fine, okay? But I'm also fine if you don't buy the financial calculator, you completely rely on generic scientific calculator, but your life will be very tough. And it will be tough for you to do well in this class. You're going to need a laptop, yes, absolutely, because you have to watch videos, you have to go through the slides, you have to take the exams through Blackboard, so you definitely need a laptop, okay? Now, for the course materials, what I'm going to do, I'm going to upload everything through Blackboard, okay? Everything will go on Blackboard. So basically, if you go to the Blackboard right now, this is your course materials, okay? Slides are here. Now, if you go to the, again, Blackboard, you're going to see record lectures here. Syllabus is already uploaded. Homework is already uploaded. So that's what you need. So go to the Blackboard, you'll get what you need. Now, this is the YouTube channel link. So whatever I'm recording, I cannot upload it Blackboard directly. So I'm going to upload it in my YouTube channel, and this is the link. I'm also post individual video link in the recorded lectures folder. So long story short, you can either follow this channel, you can either follow the Blackboard, both will help you to do well on this class. So for grading, we're going to have 3 exams, each worth of 25%. For other than exams, we're going to have 3 homework, all together combinedly 15%. So 3 exams, 25, 25, 25, 75%, 3 homework, 5, 5, 5, 15%. And participations, 10%. I'm going to talk about in details what I mean by participations. Now I'm going to follow a standard grading scale, 90 and above A, 80 and above B, 70 and above C, so standard grading scale. As I already mentioned, 3 exams. So my exam policy are you're taking through Blackboard, but close book, close notes. That's my exam policy. And the day before exams, you have to email me a formula sheet. So I need to approve the formula sheet so that you can use it on the exam time. And you can use financial calculator, pen, pencil in the exam. I believe you may need a scratch paper to scratch, pen and pencil, and the financial calculator. Good news, exams are not comprehensive, okay? So basically, let's say up to midterm 1, we covered 4 chapters. So midterm 1 going to be chapter 1, 2, 3, 4. Up to midterm 2, we covered 7 chapters, but On midterm 1, we have 1 to 4. So for midterm 2, we have 5, 6, 7. So exams are not comprehensive. Exams are, you can think about whatever we did after our last exam to until this exam. That's it. So midterm 1, midterm 2, final, nothing is comprehensive. I already posted a tentative schedule, which is very last page on the syllabus. I'll talk about that. So all those exams, all those homeworks are basically due on those dates. So now let's talk about participation, what I mean by participation. So basically after each videos you watch, you have to email me regarding the video. So let's say what I'm expecting. So if we go back to the email again, so you have to email me. So let's say BSAD 329, this is your name, and you have to do like participation. Okay. Now the headline should be, let's say you're emailing me for June 5 class. June 5 class. Make sense? Now, what do you need to do? What do you need to write on this class? You have to talk about what we talked about on this class. So let's say for June 5, we'll talk about two things. We'll talk about syllabus and we'll start chapter 1. So you have to talk about what we have done in this video. That's your first job. So we have to talk about, okay, in this video, we talked about syllabus and we briefly started chapter 1. Second thing, is this new to you? Is this topic? So let's say syllabus is not a topic. The topic is chapter 1. So in chapter 1, we're going to talk about form of business. We talk about corporations. So is this topic, like form of business, new to you? You can say, hey, the topic we learned in this video is completely new to me. Or maybe you have taken a couple of accounting classes. If you have taken a couple of accounting classes, I believe you definitely have learned forms of business there. So you definitely have learned sole proprietorship business, partnership business, corporations there. So you can say, no, I learned these topics in, let's say, principles of accounting class. So these two are basically second topic. Either you don't know what's going on, it's completely new topic, or you know this topic. So this is your second point. First point, what is the topic we went over? Second point, is this topic new to you? Is this topic old? Now, do you see any real life implications of these topics? Let's say we're talking about corporations. We are talking about how corporations make financial decisions. Yes, there are real life implications because I want to pursue a career. I want to pursue a career where I want to pursue a career in Intel, let's say. So this is very important to me because I want to know how corporations make decisions when I join a corporation. This is very important to me. There's a really important implications to me. So these are the basically three topics. I want you to shoot me an email for each videos. Each videos I post, shoot me an email for each videos. Okay. Some terms and conditions I want you to follow. So I designed the class on a weekly basis. So each week I'm going to post 2 to 3 videos. Okay, and you have each week to watch the videos and get back to me as a participations. So let's say this week we have videos for June 5 class, June 6 class, June 7 class, okay, 5, 6, 7. And then June 9 is Friday. So for all of these 3 classes, June 5, June 6, June 7, 3 classes, you have until midnight of Friday of that week. So the deadline of sending me participation emails is midnight of the Friday of that week. So here the week means for each week I'm posting some videos. After you watch those videos, you have to participate. You have to send me the email by the midnight of that Friday. Now, you have to send one email for one video. Okay? If you want to get full credits, 10% on this participation, full credits, full points. For each video I am posting and you are watching, send me one email. Okay? Don't combine. If you combine the weekly videos in one email and shoot me one email, I'm going to give you 33% of the credit, not full credit. Make sense? Okay. Now, one important thing. Create one email thread, okay? And then keep emailing me on the same thread. Make sense? So let's say you created this thread. Now reply on this thread, June 6th class. Reply on this thread, June 7th class. For next week, we only move on to second week. I think we're gonna have June 12, 13, and 14. Make sense? So one thread. So these are some terms and conditions. I'm gonna strongly recommend follow these terms and conditions. These are the points I want you at least to talk about. So don't feel that you are confined to talk about only these three topics. No. If you want to talk more, I really appreciate that. But at least talk about these three topics. If you have any questions regarding this participation, feel free to shoot me an email, okay? Now, this is all about participations, homework. There will be 3 homework through Blackboard. So for now, homework 1 is already in Blackboard, okay? So don't hesitate about homework. So I'm really, really lenient about doing homework because my policy for the class is like, homework is a good practice to make you prepared for the class, for the exams, specifically exams. So if you're struggling, if you are confused what to do, feel free to shoot out an email. I'm happy to walk through if you have any questions about the homework, because I want you to brainstorm, think deep about homework so that you don't struggle on the exam. So this is basically homework 1. I already uploaded the Word file. So what you guys can do is let's say, create space here and answer the questions what you feel necessary. Okay? And then create space here again. Answer what you feel necessary. So that's why I intentionally make it a Word file, not PDF. Okay? Now you'll see there are some problems in between. This is a problem. This is a problem. And then this is a problem. So for problems only, I encourage show full calculation. How do you did it? The formula you used, show everything. So that even if you did it right, but the final answer is wrong, I can give you partial credit. So your process is entirely right, but the final answer, because of any typos in calculators or something is wrong, I can give you full credit or almost full credit. So it's not like I'm sticking to, I'll give you full credit, but I can also give you almost full or partial credit. So this is all the homework, and we're gonna go over, okay? We're gonna talk about the homework a little bit after we finish each chapter. So this homework is based on chapter 1 to 3, 4, because our midterm 1 is based on chapter 1 to 3, 4. So I'll try to help you. Even if you struggle, any confusions, just shoot me an email. I'm happy to talk. Now homework is due. Deadline is there. So submit the homework through Blackboard by the deadline, okay? If you pass the deadline, you may not earn full credit, or I will not accept your homework, okay? So be specific, be careful of the deadline, okay? Don't break deadlines. That's not good. After that, these are additional resources. I recommend you to go over this. And these resources are common for whatever classes you're taking. Like maybe you're taking one summer class with me, one summer class with the other one. These are common university-wide policies. Just go over it. If you have any problems, you can talk to me or you can talk to the respective person about this topic. So these are like common policies, terms, and conditions. Now, tentative important dates. So I say tentative because you never know. We cannot predict futures. Things can change. If nothing change, we'll follow this. So let's say for June 5, this lecture syllabus on chapter 1. June 6, June 7, we're gonna do chapter 2 mostly. And then this is the schedule. June 23, we have midterm. Okay. So as we go, I will explain more terms and policies about midterms. Okay. Don't need to worry about right now, but I'll explain more. July 7, midterm 2. Final exam. Okay. And before each midterm, we're gonna have a homework that will help you to ready for the exam. Now, important terms and conditions. So as you know, syllabus is a tentative guidelines. What do you want to do? But in the meantime, throughout the semester, things can get changed. If anything got changed, I as an instructor reserve the complete rights to modify the terms and conditions. So if I modify terms and conditions, I'll let you know as soon as possible. And the new terms and conditions is basically applicable for all of you. It's not about only one student, it's for all of you. So don't bother about that. And if anything changes, I'll keep you posted. So this is basically all about syllabus. So feel free to let me know if you have any questions about the syllabus. And now we're going to move on to chapter 1. So basically in chapter 1, what are you going to learn? We're going to learn mostly about different type of business and the financial decisions made by different business. So let's start with different form of business. So when you talk about different form of business organization, basically there are 3 different forms: sole proprietorship, partnership, corporation. So when you say sole proprietorship, so it means one individual person start the business, run the business, make all the decisions, and that person is basically responsible for enjoying all the profits or taking all the losses. And if any liabilities or anything happens, he is responsible for everything. So you can think about one person starting the business and taking care of. Let's say in the Clarksville downtown, we have a cleaning shop, and there's one person who provides the cleaning services. And he does everything for the company, or so for the organization, for the business. So this is a sole proprietorship business. Some advantage, easy to start because you are your own boss. You can start the company or the business and run it. Least regulated, regulation is less. Now, single owner keeps all the profits. And in terms of loss, single owner take the responsibility of all the losses. And for all those incomes the owner generates, the taxing policy is basically personal income tax. In the next chapter, we'll talk about a little bit in details about how income is taxed. But just as of now, think about income for any sole proprietorship business is taxed similar to if you work for any company, it generates salaries and wages. Okay, so taxed like a personal income. Disadvantage, this kind of business is limited to the life of the owner. If that person who started the business died in the meantime, the business will be closed, most probably. Okay. Now, equity is limited to that person's wealth. So basically, if that person have only $10,000 of savings, let's say, that means that person can only invest up to $10,000 to start the business. Okay. So that's one of the problems. Unlimited liability. If anyone sues, like this cleaning company do not follow cleaning like regulations, policies, and one of the client got affected and the client sued the owner, unlimited liability. The owner has to bear the liability. Sometimes it's difficult to sell ownership interest because one business if the owner wants to sell, the owner have to sell the entire business, not fractionally. Most of the cases, entire. So it's tough to sell the business. So this is sole proprietorship. Second one, partnership. So you can think about partnership business is an extension of sole proprietorship. When more than one person, let's say 2, 3, 4, 5%, want to start a business and all become the partner of this corporation or the business, this is a partnership business. Advantage, easy to start, 2 or more owners. As there are more owners, there are more capitals. And again, like the sole proprietorship, income taxed as personal income. Okay. Disadvantage, unlimited liability, like the sole proprietorship, but you have to be careful. Partnership could be 2 types, general, limited. So when you talk about general partnerships, all the partners in the business, took part in the business operations, make decisions, run the business, and all of them share the unlimited liability. Okay. However, sometimes partnership could be limited. That means in the partnership business, at least 1 or more partners could be limited partners. All those limited partners do not actively participate in decision-making operations. Okay. At the same time, all these limited partners do not liable for what? Unlimited liabilities. So that's a limited partnership. But one caution, even if there's a limited partnership business, at least one partner needs to be general partner, because that partner will take care of decision making, running the business and everything. At the same time, that partner is liable for only unlimited liability. So at least if you want to start a limited partnership business, at least one has to be general partner. Okay. So this is the caution. Same disadvantage, when all partners die, business is gone and difficult to transfer ownership. Third form of business, corporations. So corporations, you can think about all those big companies we talk about, Intel, IBM, Microsoft, Tesla, all these big companies. So when we talk about corporations, we have to be careful. These corporations have limited liability. The owner of these corporations have limited liability. So the owner of these corporations are only liable to the money they have invested. Okay, the money they have invested, owner of these corporations. And corporations always have unlimited life, because ownership, which is investors and managements, always separate in corporations. So basically, if you think about corporations, there are some managers who run the business, and there are some owners who are different people. They provide the capital. Okay, so they provide the capital and managers run the business. And these two different persons, 2 different individuals, 2 different entities are separate. They are not same, they're separate. Okay, so that's one of the distinct characteristics, distinct features of corporations, and this is an advantage. That's why owners have limited liability and unlimited life of the business. Transfer of ownership is easy, and raising capital is also easy. We're going to talk about these as we move through the semesters. Major disadvantage, double taxation. Why? So when, let's say, you invest some money in Intel, and Intel is generating profit each year. So when Intel generate profit, they actually pay corporate income tax on all of their profit. Now, being an owner, you will enjoy annual dividends each year, because each year Intel will like to share some of their profit with the investors. In finance, we call them dividend. So if you receive those dividends, same profit, the share of the profit, you will be charged tax again as your personal income tax. So let's think about this way. You invest in Intel generated $10, okay? Intel generated $10, and on this $10, they have to pay 20% tax. So that means after tax or net income is $8. Now, this is what you own as an investor of Intel, because you are the owner actually. Now, from this $8, you got a dividend of, let's say, $1. Now, again, on this dividend, you have to pay, let's say, 10% of tax. So that means Intel is keeping $7 profit, and from your dividend, you are keeping 90 cents of dividend. So your entire return is basically $7.90 instead of $8 because of double taxation. Initially, Intel got taxed on their corporate income, and after they distribute the dividend, as an investor, you also again taxed on your personal income. So double taxation, that's one of the main disadvantage. So when you talk about different form of business, these are the three different form of business: proprietorship, partnership, corporations. Now, our major concern in this class is corporations, how corporations make financial decisions. And this is we call corporate finance. So when you say corporate finance, the major difference is when you say corporate finance, the major thing is they have to make a lot of decisions, and those decisions are broadly falls into three different umbrellas: investment decisions, financing decision, and then everyday financial activities. So when you talk about each corporations are thinking of their long-term investment decisions, they're actually thinking of their capital budgeting. So they're actually thinking of which fixed asset they invest in, which fixed asset they should acquire. So let's say Intel wants to buy some new properties, new plants, new technologies. This is basically they're thinking about acquiring fixed assets, long-term investments. This is also known as capital budgeting. This is also known as long-term investment decision. So now I want to caution all of you. One of the major problem in finance is vocabulary. There are so many different words that have same meaning in finance. And being in the first class in finance, you guys will be in trouble. Like, why there are so many vocabularies and having the same meaning? So I strongly recommend all of you to keep a vocabulary sheet and try to list down all those vocabularies having the same meaning. Because here we're trying to talk about long-term investment decision, which is also known as capital budgeting decisions. And both means thinking about which fixed asset to invest in. Second important decision, financing decision. So let's say if Intel wants to buy some lands, plants, properties, they need money, they need funds to sponsor those assets, right? How they gonna manage those money? So this is the financing decision, like from whom they should get the money, from where they should raise the capital. This is financing decision, also known as capital structure. So going forward, we're going to talk about, when we talk about capital structure, we basically talk about how much equity you should have, how much debt you should have, how much something else you should have to finance long-term assets. Third important decision, talk about everyday financial activities. This is also known as net working capital management, liquidity management. Because for day-to-day operations, Intel needs to maintain some liquid assets like cash, maybe paying day-to-day operating activities, maybe paying short-term debt, maybe 30-day debt, 40, 50, 60-day debt, like current liabilities. So they have to maintain a certain amount of current assets to pay for those current liabilities. So this is called everyday financial activities decision, also known as net working capital decisions. So if you think about the financing decision of corporations, three important decisions. Who make this decision? Financial managers, CEO, COO, they actually make these decisions. This is what we talked about: capital budgeting, long-term investments, capital structure, what asset we need, working capital managers, day-to-day finance. Forms of business, we already talked about that. Now, financial management or corporate managers, what is their job? What is their role? What is their goal? If you think about that, their job is to, when they run a business, to think about minimizing cost, expenses, so that they can maximize profit. Okay. Now, If I want to answer you in one sentence, what is the goal? What is the role of corporate managers? Maximize shareholders' value. So basically, we say that corporations think about long-term investments. And for these long-term investments, they need to raise money. They need to raise financing from stockholders, bondholders. But stockholders is the owner of the corporations. So we will talk about this in details in a couple of few chapters. But for now, just understand or memorize the main goal of the corporations or financial managers or financial management is to maximize the current value of company stock or the maximize shareholders' wealth, maximize shareholders' wealth. That's the job, that's the objective. Now, in doing so, sometimes there are problems. So we know that so far we talked that for corporations, ownership and management are different. Let's talk about Google. Who is the CEO of Google? I believe everyone knows, right? Who is the CEO? Sundar Pichai. Okay, what he does? He manages Google. He think about how to make more money from Google, right? So if he makes more money, he will not enjoy the money. The investors, stockholders, shareholders will enjoy the profit or money, right? So now, Sundar Pichai is the management and owner is the stockholders, right? Sundar Pichai works for the owners to maximize their stock price, value, or wealth, right? But by doing so, Sundar Pichai's wealth is not maximized because his salary is kind of fixed. Max, he will get some more bonuses end of the year, but his salary is the more important thing. It's fixed. End of the year, he will enjoy some more bonuses. Now, why should Sundar Pichai maximize the value? Because he rather think of why not I maximize my own value? Why not I run the Google in a way my value is maximized, not stockholders' value is maximized. Stockholder wealth is not maximized. This is called agency problem. Now, if you think about very carefully, management and owner, separate entity. Owner hire management, okay? In that case, owner is known as principal, okay? Owner is known as, if you look here, owner is the principal, stockholders, okay? They hire agent, managers. Managers are known as agent, okay? So now manager job is to act on behalf of owners. Manager job is to maximize owners' wealth. If they do so, no problem. No issues. But sometimes managers in complexity, they think about why should I maximize owner's wealth instead of my own wealth? If they do so, if managers, the agent, do not maximize shareholders or principal wealth, rather than they are engaged in activities that maximize agents' wealth, that is an agency problem. You can think about conflict of interest between principal and agent. Now, how they can do so? They can invest in bad projects, generate losses. That's one of the things. They can spend money for luxurious expenditures for their own usage. That's one of the bad things. So these are some bad examples that agents are not behaving well in the best interest of owners. So these are like agency problems. So that's why sometimes principals have to manage the managers. What they can do, they can provide some incentives so that managers are motivated. Or sometimes they can use some other stakeholders, auditors, external monitoring so that they can create some rules and policies so that management or agents can work on the best interest. So this is called managing the managers. Now, this is a big picture. This is really, really important. If we go back, 3 activities. You can think about corporations raise money from the investors. And from this money, they invest in fixed assets. And they actually keep aside a little bit of this money for day-to-day activities, for liquidity. And then they start the business and keep running the business, right? Each year, They generate profit, share with the owners, and kept something. So if we go here, think here, financial market, corporation issue securities, stocks or bonds, and from financial markets, equity, short-term, long-term debt, bonds, they get the money. So corporation issuing securities on the financial market and get the money. Now from this money, invest in fixed asset, capital budgeting, and also invest in a little bit of current asset for net working capital, liquidity, daily activities, and start generating money each year from the fixed assets. Now from these fixed assets, from this new generation from the cash flow, they pay tax, and then they can invest little bit back or share with the owners. So the idea is, think about this way. Today is day zero, okay? Today is day zero. Corporation decide how much stocks they want to issue, how much equity they want to issue. So let's say they decided they're going to issue $1,000 of equity or stocks, and let's say $200 of bonds, okay? Now from this $1,200, they get it here. They can invest in assets. Now they decided they want to invest in $1,000 in fixed assets, $200 in current asset, okay? Now from these fixed assets, they can generate business each year, maybe $50 each year. From this $50, they have to pay tax first, okay? Government pay tax first. After that, after tax, some profit, maybe $40, they can decide, there's their own decision. They can decide to share with investors or keep within the firm, and redo the process, generate some cash flows, pay tax, share with investors, or keep within the firm. So this is the big pictures. Important is big pictures, because going forward, these pictures will help you subsequent chapters, okay? Now you guys could be concerned like, okay, so if firms issue securities in financial markets, what are some different type of financial markets? What are some good examples of financial markets? So let's say when corporations issue securities for the very first time, okay, they actually issue in the primary market. Now, what is the primary market? So the very important definition, the very specific definition of primary market is like when any corporations issue securities to raise capital for investing in fixed assets, they actually invest in primary markets. Example, IPO market, initial public offering, okay? Now, later on, corporations get the money, shareholders or bondholders hold these stocks, right? Later on, those shareholders may not willing to hold those instruments forever. They want to sell those instruments to different investors and other investors. They go to secondary markets. Good examples, NYSE, NASDAQ, secondary markets. So if I want to rephrase it, when the user of the fund, which is corporations, get money from the investors, this is an example of primary market transactions. Later on, when the investors want to change hand because they do not want to hold these instruments, they go to secondary market, NYSE, NASDAQ. So NYSE, NASDAQ, some good examples. So basically this is all about chapter 1, but I want to help you like how you should address problems or homeworks or concepts in homework 1 from chapter 1. So if we move on here, this concept is from chapter 1. So let's say what you can do. Differentiate primary versus secondary market. Let's talk about 1 or 2 lines only. You can think about when any transaction occurs between users of funds, which is basically corporation, right? And investors. This is a transaction in primary market. That's it. That's it. Secondary market. When one investors transacts with another investors. This is an example. It's a transaction in secondary market. That's it. Just know the difference. That's it. One line. Three form of business. Sole proprietorship, right? Partnership. Corporations, right? Right. How can you differentiate? You can talk about one owner, right? Unlimited liability and taxed as what's like that, right? So do like this. So these are some good examples how you should attack homeworks. And if you learn like this, you should be able to do well on the exam. Make sense? If you still feel like uncomfortable in any problems, feel free to shoot me an email. I believe this is from chapter 2. Yes, we're going to talk about the next video. That's all. Thank you. See you in the next video.